Welcome to TradeTheNBA.com. This is John. This report is for the 16th of February. Well, and it's an interesting one because we had all the signals for the continuation. We had the early buy here from midterm buyers that was corresponding with short-term buyers. That's what led to the initial stop, not to mention the fact that we had retraced the dip below the red line here, which is something we look for early on. And we got our early semblances of buy right here at the GAM that came in, the gradient algorithm multiplier. That level was right around the 2660 was the close. It had appeared at the open, which was 2653 range. In intraday, it was looking very strong. We even retraced that if you weren't completely convinced on that one. That was when the whole inflation fear finally, which is a bunch of baloney. We already knew that that was building. We had seen the oil move and knew that that was being portrayed down the road. But that in the absence of growth would have been an issue. But the fact that you're seeing an expanding economy, there's just no way around that. That's why this whole dip was just about a retrace. Again, this all began off of the whole memo release. And as we realized that the entire government isn't going to collapse because of that, lo and behold, we're right back to pretty close to the initial drop point. We have a little bit more to go, 2755 range. Not a shock. I mean, you're not going to get past it. However, something worth noting is we are in positive extreme areas. So algos have, disproportionately kicked in right in this range, and at some point we're going to be coming back to this 2688 again, and that's okay. It's just something worth noting as we roll back in there. You can see that the Nasdaq doing far better, where we were just looking at trying to get back to this point. It's already past it and much further up. So the reset buy on that one certainly worked out spot on. No question about it. Euro taking a big jump off this. The dollar has just been beaten alive, which, does that make much sense? No, it doesn't, because the reality is while they're no longer within the arrangement, the fact that you'd have inflation in the U.S. Should be attracting dollars to the U.S. Europe certainly isn't performing anywhere near the same aspect. So is it a little interesting and suspect? Yeah, but you got to go with what the readings are. And when you have cyan under red, we had the reset here of the orange coming back. That took place right here after the brief short signal. And earlier we had the shakeout turnaround, which started actually bar earlier right in here. Back at the 122, and all we were looking for was this retrace to that 122.5 midpoint anyway, which is something that posted on the Skype chat and even talked about with Isabella making her trade on it, and then the turnaround. So will it survive that? It still has decent readings, but should it now? Nor should TLT, rates should be moving much higher. This is still an ugly shakeout and continuing, so no real change in that position. You can also see from that DOC, if I put it back up real quick, just trapped right here with the orange caught right in the middle. This steel is a little outside of it. If the steel were inside, you'd have a little bit more consistency with the decline. So this kind of gives it more of a basing weakness. This, I guess, the easiest way to describe it, where you're not shocked at new lows, but you're not expecting a straight downhill like we had been seeing. And oil making a bit of a resurgence, coming back, yes, fine. We've seen that all it takes to refill, we had the positive extreme, so I'm looking down at the extreme histogram down here, and the last one we had was this one right over here, which we came back and filled perfectly, and lo and behold, we bounced right off of it, so no real shock off that. It's right in line with expectations. Again, it's still a vibrant economy is going to utilize more, and that's going to have some broader impacts on how quickly production can match, and that's going to be something worked out with the shale in our exporting. But again, it's still a positive for the economy, so no way around that. And of course, gold, finally recognizing that, yes, in fact, hey, there's some inflation for the first time, and this is going to be the defense against that rising inflation. And the secondary defense is this: as soon as we got the inflation numbers, where did cryptocurrency go? Straight north. Gold getting a little resurgence, so it's having a little bit of a backfill. It's got a lot of positive extremes in here. So we're probably going to, we already took out that area right there. Another positive extreme right down here in the 94 range, and then even from the initial breakout. So likely to see some back and forth pull with this. And not surprised, I guess it was a huge $400 million investment into it in the last couple of days, which obviously has propelled it. And the thin volume, again, is something that leads to the ability to abuse it. But how different is that than anything else we look at with the markets? It only takes a few large players to make a huge difference. I've got to shrink this one again. I mean, we're looking at really good volumes. So we had the initial run-up. We retraced that entire positive extreme setup that developed, was right back here. So we came back through, a little bit of a carry through from it, but it produced a beautiful little buy setup here. So what you were looking for at that point is the crossover where the steel dips back below right about here, but at that point took place right at the 50% and into rising red DOC and rising shakeout. We're not going to short into rising shakeout, and at that point you started with the rising brown. You're not going to short into that either. So it wasn't until we got all the way up here, which produced actually a short signal and gave the little bit of a retrace, which right in line, didn't even go below the short algo, which is that little line right in here. I guess I can increase the size of this a little bit now that we've covered a lot of that. There we go. That makes it a little easier to see. Voila. So we had the rise there. We ended up with your short DOC spread, which just came down to a minimal and no dip of shakeout below zero. Continue to do the same thing. And then you got the first warning sign there, secondary one here, and lo and behold, we did the exact same thing, coming right to the short algo, which is right there. And actually did dip negative for this one for just the briefest of moments. And then the shakeout started turning right back around. And that proceeded to lead us all the way to where we are. Positive extremes started right at the open here. So wouldn't be surprised those to be filled back in. And then a push back up to the highs again. That's a traditional modus operandi in pre-market. You get the big bump, fades out into the open. Usually you get a little carry through draft down below. In this particular case, 50% would be perfect. And then during the day, it works its way back right to where it was. So we'll see if that pattern follows through with itself. Of course, it can be impacted by the readings, but pretty nice return to equilibrium. It's amazing to listen to a lot of the mainstream articles and that everyone should be selling this market and that it should just be, run for the hills, which clearly would have missed big bargains. So I guess a lot of people did buy the dip despite the aforementioned warnings by all of the mainstream media to tell you to do otherwise, which is always an indication you should do the opposite of what they suggest because they're wrong most of the time. That's okay. In the meantime, we'll stick with the real readings. A little bit negative shakeout here, so that backfill is already starting to take place as expected. So we'll see. You got a full reset of the steel, so maybe it won't last very long. Go from there. As always, trade well. Talk again as the market's open.